You are listening to Revealing Real Estate Podcast, where we dive into getting over your fear of taking risk in real estate and making money while you sleep. I'm Nick Oppedisano, your host and real estate guru with over 20 years of experience. It's time to get real. Hey everybody, how are you? Welcome back to Revealing Real Estate 2025. Just want to wish everybody, all our viewers, a happy new year and a healthy and prosperous, of course, 2025 to everybody. We're going to start the beginning with the show with lots to talk about. We're going to have Gaetano joining us, and we are going to break down what to expect for 2025. We are going to talk about, new government and change and a new voice happening, as we talked about many times on the show. Vince has requested to come on, so let's get Vince on the show right away. And we're going to talk about the condo market. There's a lot of things happening right now. A lot of sectors right now not doing very well. Unemployment seems to start, especially on the trade side, is going to start increasing. Vince, how are you? Happy New Year to you.
Happy New Year to you too, Nick. Glad to see you again. It's been a while. Hope the holidays were good and everybody's ready to go and for the new year. It's going to be an exciting one.
It is going to be an exciting one for sure. Yes, everybody's good over here on at the OP team front. We got our new office location that's currently under renovation. That's taking up a lot of my time right now within my schedule. Can't wait for construction to be over. It's not something I really enjoy too much.
I ventured up north and I appreciate the tour. Looks great. The size and the space and the height is the ceiling height looks unbelievable. So we're looking forward to when that's ready to go. And you're targeting another month, and you should be ready to open up the doors.
Yeah, we'll be in the new podcast room over there, which is going to be exciting. We'll have a full boardroom, double the space that we currently got in Woodbridge right now. So we still have the Nobleton office that's still underway right now, and we'll have agents up there periodically shifting and rotating. And then Woodbridge, we're expanding. We had despite all the bad news within the real estate market itself, a lot of times most people, when they're having difficulty selling their homes, they look more towards the big size teams today to come and help them through the process to get that experience that really shines out there within the market. Because we had a wonderful year still. We ranked. I got a big letter from RE/MAX Premier congratulating me, and just telling me about all the wonderful achievements that our team did. And I'm so proud of our team. We out of 74,000 realtors in the Toronto regional market, we ranked in the top 0.11 percentile, which is probably in the top 100 real estate agents right now throughout the entire GTA in volume, and top 0.18% in units sold. So Vince, sometimes I do believe having a good seasoned realtor who's going to help you through these transactions in these difficult times are going to guide you the right way and get you through these difficult times, because in these markets here, you need an agent who's going to have some big marketing campaigns. You need a realtor who's going to be able to invest into your home and make sure that the curb appeal is at its top level regarding in staging, fixing any minor repairs to the properties. As you know, we offer, which is a wonderful program that we're offering, is the pre-owned certified program, where the property comes with a 12-month warranty on all the appliances, and the property has been fully inspected before it even gets listed on the market. So we're finding that that's been a real big encouragement for sellers out there within the market, and buyers are feeling really comfortable in buying our product today because of that. And I'm just so proud of the achievements. We've ranked right now in the top 20 top real estate teams in all of Canada for RE/MAX, and that's all of RE/MAX in all of Canada as well. Yeah, so 2024, we were blessed to get through it with a really wonderful numbers. We're excited for 2025 and what it's going to bring. We're just not optimistic right now, and a lot of times too, Vince. I'm just going to get into this real quick because I know there's lots to talk about. Is the condo market right now? As a realtor, I always specialize in residential resale, and the reason I focused my specialty on that, you can choose commercial, land development, pre-construction, new pre-construction. But resale always keeps the wheels moving because people are always going to need a roof over their head. Whether they're upgrading or downsizing, yes, we remove the speculator investor from the market, but the resale homes always make sure that the bills are getting paid at the end of the month because people will always transact. If you look at the pre-construction condominium market right now, it is completely tanked, right? Because there was a lot of speculation in realtors pushing clients to go and buy a condo that had a surplus of a 25% increase for the expectation of that 2025 price points that would average up in an increase 3 to 4 years down the line. I never wanted to push my clients in that direction because I just didn't think that was the right advice. I don't like to speculate. If I had the money today, I close on a transaction today that's going to generate that rental income if it was an investment, and I can start getting into the market today at a much cheaper price than, these greedy developers were actually charging. And a lot of times, the price points that I looked at, $1,400 a foot in Vaughan, was just outright ridiculous. So I never wanted to direct my clients in that path because I just felt it was a little bit dishonest and it just wasn't something that I believed in. And thankfully today, a lot of pre-construction realtors right now are suffering because these sales offices are still flopping right now and they're not doing really good. So
I think what's important to illustrate here is when you peel back all the data, the wrong people invested in these pre-cons. They weren't true investors, they were speculators. And speculators that probably had no business in that space. And the reality of the matter is, Nick, is that a lot of realtors selling this product just went to go chase anybody that had capital and didn't vet the knowledge and the risk tolerance of these folks and really didn't give them the full scope of what risks were associated with this type of investment. We're seeing people that are buying on assignment properties that are upside down so much that the original buyer has to come up with cash on closing to close in addition to the 20% down that they gave the builder. So these are bad investments. They were targeting folks that had no business speculating, and that's what really happened. People were speccing, they weren't investors, they're looking for a quick flip, and they got burned. And the reality is a lot of people are paying for it. A lot of people are taking the hit over the head, really moping around, wondering what happened. And some are so out of touch, thinking that this is going to bounce back next year. This is going to bounce back in 2 years. And the reality of it, it's not. Because a lot of this product was garbage. They're dog crate condos. And the reality is nobody wants them. They don't pencil as an investment. They don't even make sense as a home because they're so small. Now, I'm going to take a lot of heat for that. I get it. I'm a big boy. But the reality is they're terrible, terrible products in general. And condos should be 2 bedrooms, 1.5, 700, 800 square feet for any type of small family to live in. When you're building 450 square feet, who are you kidding? That's like a hotel room. And people don't live in hotels. Like, at least they shouldn't be. Anyone who wants to raise a family. So it's just not the right product. But to your earlier point, now is such a difficult time in the real estate market. You need someone to guide you. You need experience. You need to draw on people that know how to deal with finance, give you the goods on what's right, what's wrong, how to position yourself for success. And the reality is, you can't afford to deal with a novice because you're going to get burned. Like we talked about this lately. The reality of the matter is there's a lot of people still want to sell at 2021 prices, and people want to buy at 2000 prices. So there's the expectation in reality is just not there. And you've turned down listings from people whose expectation was not reality and not in tune with the market. And a lot of people are so desperate, they're just taking them on and making big mistakes hanging on to this. And then what are you going to do? Just float these people down as these listings age and become more of what's wrong with the property. It hasn't sold in 60, 90 days. Because that's the question a lot of people are going to ask when things are sitting for such a long time. So it is so critical to deal with people that know what they're doing. And I commend you for investing in your business, because when you are building out a new office, that's not cheap. But what it does say is that you're committed to this long term. You're not a fly-by-night. This is your full-time job, as with most people on your team. And this is what you guys do for a living. So hats off to you. And I'm looking forward to the new office, because it's a good sign that you're there for the long haul.
Yeah, and I've always thrived and based my business model on providing integrity to the consumer, and making sure that all my realtors are a good representative of our brand and who I am as an individual, because they represent me, they represent my interests, they represent what I believe in, and I truly feel, making sure that we direct the client to make at least more of a proper analytical decision for their future. I never look at the short-term gain in real estate. To me, real estate is a 5-year plan. Anytime I'm going to go and purchase something, or I look to get into the market, or I have a client wants to get into the market, my first question is, what's your long-term plan on here? Where do you see yourself in the next 5 years when you're purchasing this product? Whether you're an end user that's looking to either upgrade into a home, and that's where the market is right now, or you're looking to downsize, or you're just going to buy it as an investment, or you want to get into the market as an investment point of view right now. And I think just making sure that you hold their hand and you guide them the right way, and you don't put them in situations where you know that if things do change, as they have changed now, you're going to get people that are going to be stuck, and not be able to survive that type of degree of difference or negative loss on these properties. And there's going to be a lot of people right now, and Vince, and I'm sure you're hearing about this too, is that the builders are going to go around, these developers are going to come back and sue you if you're not able to close. And there's a lot of people that bought on speculation that can't close on these condos. And you're talking $150,000 difference in price points today from when they bought them to what they are today. There was a big market that I always just thought that, hey, we're just going to buy on speculation, buy at $1,000 a foot. In 4 years from now, when these condos are developed, we're going to be able to sell them at $1,200 a foot. These developers weren't leaving that money on the table for people. They were selling them at already $1,200 a foot, knowing that the resale market was still only at $1,000 a foot. So why would I direct you to go buy that 4 years down the line? I can't predict the future. I don't see that.
And to give people a concrete example, this is the type of stuff that we're seeing, so people could put some context behind this. We had a client that bought a pre-con on assignment. So they bought for $535,000. Okay, the purchase price from the builder that the original buyer bought for was $709,900. So they gave their 20%, which was 140 some odd plus extras, okay? And to close this deal, the vendors have to pay $26,000 and change to close the file. Like, that's how dramatic a loss that original buyer took. Not only is he losing his deposit, he's got to give another $26,000 and change to close the deal, to avoid a lawsuit, to avoid having to come up with land transfer taxes, all the hookups, all the closing costs that the builder adds on. Like, this is unreal, and we're seeing it every day, and it's becoming pretty sad, because a lot of people are tapping out. It's just a sad situation when you see people in this circumstance having lost life savings for it. But hey, it's a new year, and hopefully people have learned, and I think they're going to be licking their wounds for a while. I don't think they're going to be running back into the market, take another beating anytime soon.
Yeah, and I think we lost a really big part of that market to speculators. I don't think we're going to see speculators come back in this market for the next 2 years on a minimum. They'll come back once they start seeing more encouragement within the market itself. investors right now are not. They're if you got cash in your pocket, these guys are going to be picking up some really good deals within the market where, a lot of people are hurting right now. But there's not much out there for people to really pick up, and I don't see this condo market coming back for the next 18 months on the pre side of things, because we talked about this many times before, Vince, in the past. Resale is a much better option today, bang for buck, and you know what's happening today. Let me give you an example of this. If I have a builder and he's looking to build on speculation, so he wants to buy the land today, and it'll take him, let's say, 16 months to build his house. He wants to know what he's going to be able to turn over what his profits will be on the turnover side of things. But I can't base his profits on what it's going to be when the product is finished. He needs to know what his profits are in today's market, because it's important for him to know what he can sell that house for if the product was finished today, not in 18 months from now. And it does make that much of a difference. It does. I will never sell a builder based on speculative prices. And I think people have come to that conclusion, or that understanding, that it's not worth it to speculate within the market. You have to have your answers today. The unknowns are very variable right now, and you just want to stay away from that, especially within these markets right now, because things are very volatile right now. I know interest rates are still coming back down. I think on the 29th of January, we have an announcement that's going to be taking place.
Let's hope.
Well, let's hope. Exactly. Well, the bond, I think the bond is continued to rise, Vince, if I'm not mistaken.
Yeah, it's up almost 35 basis points this year. So fixed rates are under pressure to go up again. And the job numbers, albeit, a big chunk of them are still public sector. So that's probably a little bit inflated. But the job numbers came out stronger than expected. So I don't know where these people are working, because there's a lot of folks that are getting laid off. A lot of people are not confident in their employment anytime in the next 3 to 6 months. So I guess we'll have to wait and see what other numbers come out. I'm really keen to find out how inflation is going to do. I think that's going to come down because of the GST holiday that took place in mid-month through till February 15th. So that's going to have a negative impact on inflation, which is artificial as well. So there's a lot of moving parts. We're going to have to see how this plays out with the governor. I think we're due for a quarter-point decrease at least. I don't know if we'll get a full half point again, but it's going to be really interesting to see how this plays out over the next 3 meetings. There's one in end of January, one in March, and then I believe another one end of April. So going to be, everybody's going to wait and see. And having said that, Nick, I think it's important and vital that anybody that is preparing to buy take advantage of their RSP contribution room and the RSP home buyer program. So that program allows you to withdraw up to $60,000 out of your RSP for the purchase of a home for each person buying. So if you have unused RSP room and you make, let's say, 120, 150 grand, and you have that saved to buy a home, put that in your RSP. It has to sit there for at least 90 days, and then you can withdraw it under the RSP home buyer program to use it for the purchase of your home. So you could get a tax refund come April, May on that money to boost up that down payment to help you carry less of a debt and allow you to come up with more down payment that puts you in a better position when you're buying that home. Then there's the first home savings account that's available. That's up to $8,000 per year, up to a maximum of 40 grand per person. I think you could carry over the unused portion from last year and the year before. So that's a possibility of another 24 grand that allows you to deduct from your income. And then, of course, you have the tax-free savings account. And those 3 tools should be taken advantage of in the next 45 days that are left till that RSP deadline. Because here's your window to build up that down payment to allow you to add more to your strength of buying and maybe carrying less debt.
Vince, that's some really good advice. And I if anybody, wants to sit down with Vince, I'm sure you're pretty open to getting some messages. Absolutely. And talking to people.
I think it's really important we pound this opportunity to as many people as possible, because people need to be prepared to buy in the spring market as rates start moving downwards, becoming a little bit more attractive. I think that the confidence is building up, and these are tools that help people. They're government tools. It gives you a tax advantage, gives you a tax refund on any contributed amount towards being deducted from your taxable income. It's a no-brainer, but the window is till the RSP deadline. I believe this year it's March 1st. So take advantage of it. Get your notice of assessment from CRA, look at what your contribution room is, and take advantage of it.
Yeah, very good point. So for all your first-time home buyers out there, there are some creative ways to start looking at getting your financing and getting yourself within the market. Get pre-approved. Yeah.
So and then we got
stay
the VIP
away
program.
from pre-construction, please. Call us. We'll get you to some wonderful deals that we can find you that are going to be below market value deals on that side of things for condos. Vince, we talk about it on the side, and we're speaking of first-time home buyers that really don't understand the difference.
Yeah.
When you're paying something on pre-construction, that HST charge is incorporated within that price. So the builder, that developer, has to increase that price point, and the consumer at the end of the day is going to be paying that HST. Second thing is too, your Ontario home warranty program. There's a charge that's going to be paid. If you bought something resale, that charge was already paid from the person who already bought that. All the closing costs that are going to be associated to pre-construction versus resale are a lot cheaper. You're going to have in a resale side of things, you have the windows. You got your fence done if it was a freehold property. You have all the appliances already included within inside the property. Everything is pretty much ready to go for you. It's turnkey. The only real closing cost that you would have to pay, just like on any unit, would be land transfer tax if you're a buyer, and your legals. So at the end of the day, really try to emphasize towards more resale today, because that's the better buy versus buying pre-construction, and that's the truth of this all. So that's just my advice for young millennials, Gen Zs getting into the market right now. So
listen, it's always exciting to be the first one to use the toilet, but here's news for you. You could go to Home Depot and get a brand new toilet seat. Okay, it's easy to install. Couple screws and you're done. So you can still get the luxury of sitting on a brand new toilet seat, but resale will save you a ton of money. No fences that have to be built, no window coverings that got to be put up, no landscaping that needs to be redone, paving doesn't have to be looked after, and all your hookups get avoided because you're not paying the builder those fees to pay for that initial hookup for hydro, gas, and all that fun stuff. So you save thousands. And of course, you don't have to put the new deck in because there's already a deck there most of the time. So I think it's the winner.
And I think we're going to see a big surge of inventory hit the market come February. I think there was a lot of people in 2024 that held off on price point, that couldn't sell and took their house off the market thinking that, hey, let's wait till the spring market, because there was all this talk of the spring market increasing in value, and you're going to get all that inventory come back onto the market, plus everybody else that now want to either make an upgrade move or downsize as well. So that end user, there's going to be a big flux of inventory that I think is going to start increasing. You're going to start seeing that trend move to about 25 to 30,000 units to come out on the market itself. Hopefully, people do price it out correctly, and realtors, just be careful on what you take on this year. Because as you know, there was a lot of business that I walked away from just because the home was overpriced, and I didn't want to put bad money over bad money on taking on that listing. It's imperative that you price correctly. Top realtors, the one main formula that they have is that they do the research and they know how to price the homes correctly. And you'll see that all top realtors in our industry today are successful and have sold signs on their front lawns because they know how to price the home. And if you don't think, and that's the benefit of joining us on a team. I teach, I mentor and train my agents to show them, there is a formula towards pricing properties today. There is a strategy towards, pricing out that home and making sure that you understand what that true value is for that property. So we sit down and we talk about it and we advise and show them how important it is and how imperative it is to make sure that you're going to open up with the right price today. Because you're investing thousands of dollars from the initial get-go. Staging alone on on a detached home, main floor and second floor, is going to run you $3,000 to $4,000 easily on the first month.
And that's per month, right?
And that's per month. Well, no, there is a reduction in price point, but there is a monthly charge on it. That happens. They give you a discount. I think you pay the 50% of that on the second month, and then it goes down even in the third month. But still, you have to be prepared. Average days of homes on the market right now are between 30 and 45 days on the market. So homes will sit a lot longer. So you got to be prepared for that. But you got to still market it. You got to do, your video photography is going to cost you close to $2,000. So you're already initially going into an investment of $5,000, $6,000. So, if you don't sell that house, you ain't recovering that money back.
It's a lot of dough.
It's a lot of dough. So that's why we get paid what we do, and, it is what it is. But there's a big investment initially involved in it.
Well, I'm glad we're back.
Yeah, it's exciting. Our viewership is down today, but I think once people realize that we're back, I can't wait for the new podcast room too as well. It's going to be more exciting. It's going to be...
Well, listen, there's still a lot of people on vacation. Everybody's waiting for the Bank of Canada to make a move on the 29th. And listen, there's a lot of folks that slowly have more positive sentiment towards buying, with 5 Bank of Canada decreases last year, possibly a few more coming to start the year. That's good positive sentiment and confidence for people to start thinking about buying again. I think we're going to see a little bump. I think there's going to be some activity on the resale side in quality markets. And as we pointed out, I think the condo market's still in the slumps. Going to be a tough time slugging it out in that. I see a lot of rentals pick up. The end of the year had a very high number of rentals available. So it's a lot of people trying to fill empty units that they can't sell. And I think that's going to be a continuous trend going into 2025. And if you're a tenant, there's going to be a lot of choice in the one-bedroom space. And if you're really comfortable in small spaces and you're a caterpillar that turns into butterflies and likes to be in that cocoon, there's going to be a lot of deals. There's going to be a lot of deals.
Yeah, Vince, I tell you though, the rental market's through the roof. We listed 3 units. Joe Vitale from my team listed 3 units Upper Mall. He was in multiples. The amount of showings that we were receiving on a one bedroom at 2,400 square feet was incredible. So there is a lot of people out there looking for rent. I'll tell you that much.
So that's good. That's good for folks that need some relief on the rental side, that we're paying astronomical rents. So this is all good. I think we're starting to see that balance out, and it's going to be bumpy, but I think we're going to see some progress in the spring, and that's all good news from the 2024 carnage that we all dealt with.
Yeah, and we talked about how this country needs a new voice, Vince, and we haven't talked about Prime Minister Trudeau stepping down from office, and I just want to get your opinion on what do you think you kind of foresee based on new leadership, a new voice coming in, and what this means for Canadians moving forward.
Well, I think there's a sigh of relief when Trudeau announced that he was stepping down. I think people have just had enough. The next election's a change election, so people know that there's going to be an adjustment in mindset, and there is going to be a new voice. Now, the Liberal PMO, Prime Minister's office, they're trying to drag this along. I know they're supporting Carney, but if they don't change their ways in presenting a new solution to Canadians, it's just going to be more of the same. And I think Canadians want to change. I think anybody who does come in better realize that every Canadian is going to hold them accountable. Every Canadian is going to be watching, and no one wants to deal with any more bullshit and games and corruption and scandals. We want accountability. We want people to be transparent. We want high integrity people. I don't know if that's out there yet, but I think Canadians, voters, the residents of this country got to stand up and demand better. And we can only do that by being active, by participating in the election as much as we can, because at the end of the day, what we dealt with the last 9, 10 years, which was Trudeau, is our fault. Is voters' fault for being lackadaisical and not demanding better. And at the end of the day, they're politicians. So let's call them what they are. They're politicians. They're trying to always sway to the masses and try to stay in power. But Canadians and voters have to demand more from them. And we should be pounding their emails and knocking on their doors and telling them that we want this done in a better way, and we want to not worry about cost of living. We don't want to deal with high inflation. We want a strong government standing up to tariffs, threats from a president south of the border. And we need an economy that works. We need to focus on finding capital to grow this economy.
Stop this overspending.
And if you're going to continue vilifying wealth creation, you're never going to get growth, because the reality of the matter is in order to create growth in an economy, you have to reward those people that are going to risk capital and invest in that growth. And if you're going to vilify it all the time, then you got your priorities in just disarray, because it's not the way the world works. You have to reward people that are willing to risk capital and they want a return on it. And unfortunately, some people are going to get wealthy, and that's okay. So stop vilifying builders, stop vilifying developers, and help them build, because the reality is the environment right now doesn't work. We need homes. We need to build them fast. We got to cut regulation. We got to get rid of development charges. We got to figure out a better way to finance infrastructure other than upfront development charges. Maybe you got to amortize it. Maybe you got to fund it through bonds, municipal bonds, or whatever the case is. But you can't continue to do it the way it is and add 200 grand in development charges to a home when all you're doing is penalizing the person who's buying it.
35% of those charges are in fees that are given back to municipalities and
it doesn't make sense. So
it doesn't make sense.
I think we're going to see a lot of change. I'm excited about the change. I think it means we all got to be a little bit more active. I think we got to participate in the process. And I think we got to ask hard questions and don't tolerate bullshit. Call it out. And I think that's important.
Good point. We have a problem on our hands still, though, Vince, in regards to price points and values of these homes today that the average Canadian today can't afford. You know, I look at my kids, for instance, and how long it'll take them to save up for a down payment on a home right now would probably take them up until 45. My son would have to be 45 years old to actually come up with 20% down payment based on the values and the cost of these homes today. What do you recommend to somebody out there right now in the market or wanting to get into the market, or speak to somebody who's my son's age, who's my daughter's age, who's 17, 18 years old? What advice would you give them moving forward?
You got to have patience, and you got to believe that your strategy will work over time. You know, when I have 3 boys, they all went to post-secondary education, and when they were all born, I started an RESP. It was maximum $2,000 a year you could put in there. You get benefits with a grant and this and that. And I always thought, what's $2,000 going to do? The price of education is going to be so expensive in 18 years that this is going to be negligible. Well, lo and behold, putting it into proper investments, which aren't necessarily impossible with index funds and stuff like that, we had a really nice nest egg. And thank God one's still in school. But the reality is we're going to have more money left over than what we needed. Okay? So the fact is a 15 or 18 year run created a nice little nest egg. Now, if young people want to start buying, they got to start saving when they're 18. At 18, you can start putting money into tax-free savings accounts. You could take advantage of the home buyer savings account. Maybe you don't put the full $8,000, but you put something in, right? And you start taking advantage of these tools. And maybe you're not buying your house at 25. Maybe you got to wait till you're 30. But that 12 years, you have an opportunity to save money, okay? Maybe you don't buy the car. Maybe you take transit. Maybe you don't go out every night with your buddies or every weekend with your friends. Maybe you go out once a month. And you start focusing on savings. financial literacy is so important today, and I think young people need to start spending a little bit more attention to how to save money. And I spend a lot of time this time of year doing budgeting for people and stuff like that. My best tip that I give to folks is call your credit card company and say you lost it and tell them to send you a new one. Because all those recurring monthly charges, subscriptions, any fees that are coming out monthly that you don't know how to get a hold of people to cancel will stop coming out, and they're going to contact you to re-engage and re-subscribe. And you could pick and choose who you want to do business with because you forgot about that subscription with Paramount Plus or Disney or whatever the case is that you don't need anymore, and you just got it to watch, I don't know, The Sopranos or something like that. Or like, you just have to start thinking smarter. And do you need to order Uber Eats? Go for a walk. Go pick it up. Like, you're paying for it. You're paying more for convenience. And people need to start thinking about printing up bank statements, printing up credit card statements, and looking at what they're spending on. Everything's electronic. You're only seeing 3, 4, 5 transactions at a time on your phone, and people aren't realizing the amount of money they're spending and where it goes. So to young people, financial literacy, have a budget, know where your dollar's going, understand how to save money. And I always believe David Shelton's Wealthy Barber is one of the best books I've ever read when I was 18 years old. And that is, pay yourself first. Set up a separate account. Put 10% of whatever you make into that account and just save. Pay yourself first, 10% rule, and you'll be on your way to saving money.
Yeah, that's a really good point and a really good answer to that question, Vince. I think that hopefully you helped somebody out today, and I really emphasize.
Never know.
Yeah, for the younger you are to start saving now, I think your future could be bright, and I think for parents that have young kids, put away that nest egg for them. And I don't, based on inflation, believe in just putting away cash, Vince. I'm not a big cash guy to have, all this money within the bank itself, because I do believe over the time, the value of that cash would actually decrease in value. If you can put it into, a solid, blue chip stock, just even invest it into the S&P 500 where you're going to get your 5 to 6% returns. Or go buy a real estate product that eventually will continue to rise. And I don't think this real estate market is going to get any lower anytime soon. I do believe values will increase.
But I think what's also key here is that parents and grandparents understand the struggle of young people today, and in doing so, they realize that they've been fortunate to ride the wave of building wealth because of the spike in values. And they're probably most likely going to help their kids more so than we probably got help when we were buying. So I think that sensitivity is there. And I think we're going to realize that there's going to be some gifts and help when people are buying from their parents and grandparents. More so than ever.
Well, think about the opportunities that we faced, or that we had growing up, right? Where we were able to surpass that generational wealth, where I made more money than my parents itself, and my real estate portfolio was actually, I was able to surpass them within that wealth. But today, how often are you going to see, an 18-year-old, 20-year-old surpass their parents' wealth? Come 20 years down the line when they're 40 years old. The probability of that really happening is very, very, very slim. And I think
this will be the first. Yeah, this will be the first generation that we're not better off. That will not be better off than the last one. So you're bang on there. You're 100% correct, and it's going to be a struggle. But it's not impossible. It's going to be a struggle.
Yeah.
And expectations got to be set, and maybe there's going to be a lot more mobility across this country, and you're going to see kids picking up and saying, "I don't want to live in GTA."
Yeah, good point.
Right? I want to live in another part of Ontario. I don't want to be a slave to a mortgage. I don't want to go to work just to pay my home, and I want to live a little bit. So you know what? I'll move out east. I'll move out west. I'll move north. I'll move to Sarnia. I don't know. somewhere that's cheaper than the city. And with, internet and wireless and access to everything with your phone, do you really need to be here?
True. Yeah, I know. It'd be interesting to see. Vince, every Tuesday.
I'm getting warnings on my phone that it's getting too hot in here, which is, I've never seen this before. My phone's gonna blow up, but it's freezing outside, so I don't know how it could be so hot in here. But I hope this doesn't end.
Yeah, I hear it. No, it'll be fine. So listen, we're gonna wrap up though. It is 40 minutes into the show. We are going to be every single Tuesday, of course, me and Vince Gaetano, 11 o'clock a.m. on regular schedule moving forward, guys. So we look forward to kind of bringing you updates into the real estate market, into your financial wealth. And we thank you for tuning in, and we do appreciate you. And we'll all see you next week.
All right. Take care.
All right. Take care, guys.
Looking to buy or sell? Call a team you can trust. Don't believe me? Our Google reviews say it all. Put us on your lawn, your house will be gone. TheOPteam.com.